Central banks in Europe and Japan have now implemented negative interest rate policies. A negative interest rate environment is a monetary policy where a bank customer actually gets back less than the original deposit. Negative rates are an attempt by central banks to generate inflation and stimulate the economy by forcing people to spend rather than save. Historically, gold has been an excellent asset to hold during negative interest rate policy environments because the dollar typically weakens and virtually no safe asset will offer a rate of return. The power of gold during negative rates is that it offers a better chance at a yield than cash or bonds, which are money losers under a negative interest rate policy. The price of gold is the highest it has been since 2013 and is up 16% year to date, primarily due to negative interest rate policies, and in the short run looks very bullish.